today's episode of Have a Plan Before You Land, Gerry Scott asks U.S. tax accountant Stephen Flynn, can Canadian snowbirds that spend their winters in the U.S. be subject to U.S. tax?
Could a Canadian spending their winters in the U.S. also be a U.S. resident for tax purposes?
So they can be, and it really depends on the amount of time they spend in the U.S. While Canada's residency rules talk more about the subjective nature of where they live, the U.S. is a much more objective test. They look at what's called the substantial presence test. So if an individual has more than 182 days spent in the U.S. in the last 3 years based on a weighted average formula, they could be considered a resident of the United States for tax purposes.
If an individual is considered a U.S. resident here, what do they file with the Internal Revenue Service?
Well, if they spend a certain number of days in the U.S. each of the last 3 years, and if they meet that substantial presence test, so long as they spend in that calendar year 182 days or less in the United States for any reason, they can file Internal Revenue Service Form 8840, known as the Closer Connection Statement, answer the questions that establish that they've got a closer connection to Canada compared to the United States, and that should be all they need to file with the Internal Revenue Service to confirm that they're not a resident of the United States.
What are the U.S. federal tax issues when selling U.S. property?
Well, people have to understand that when they have a U.S. real property interest, and that could be anything from a house, a condo, a townhouse, even a timeshare interest, that sale, if there's any gain on sale, is subject to U.S. federal income tax. And in general, if you hold the property longer than a year, those tax rates are capital gains rates, which can be as high as 20%. They also have to understand that on the sale, that the U.S. federal government isn't going to wait for their tax revenue to come. If you're not a U.S. person or a U.S. resident, there could be withholding tax as high as 15% of the gross sales price on the day of closing.
To learn more about today's guest, send us an email.